Right now, gold is performing exactly as I would expect it to, given everything that's going on right now, given interest rates, given the Federal Reserve saying that they're going to be tapering their balance sheet, stopping their asset purchases in March, raising rates, what that's doing to real interest rates, given the current inflation rate, and given the inflows into ETFs like GLD and what that's doing to COMEX vault inventory. I'm not surprised one bit at the price of gold right now, the price action of gold, and what it looks like it's going to do in the coming near future. Ready? Let's dive in. All right, first take a look with me here at this chart of gold. And you can see here, I've got this triangle drawn. You can see the last time I made a video about gold, it had just broken above 1830 right here and it had sustained. And I was saying, hey, look, this is a good sign. 1830 is a long-term resistance line here. It's had trouble getting above. So if it sustains above this line, that's a very good sign. But I said, I anticipate that it comes up, hits this declining trend line here, and then falls back down. What did it do? Exactly that. Right on cue when the Federal Reserve came out with their press conference after their last meeting, gold started to fall, just like you'd expect, and guess where it landed before it rebounded? The bottom ascending trend line. Hit just like clockwork and bounced right back up. Now keep in mind, we are closing in here. If it goes all the way to the end, we've probably got just about another month here, maybe a little bit longer, of consolidation sideways before this thing breaks out one way or another. If we zoom out a little bit, we can see that the long-term trend here, we're showing a giant bull flag, and as many, probably like 1,000 of you pointed out in the comments section of the last video I did on gold, you zoom out even further and you see a massive, giant cup and handle. Now, are some people saying gold is dead? Yes. Are some people saying it's just a rock that does nothing over time? We're still below the all-time highs. Well, yeah, of course. We had a bubble in 2011. Of course, you're going to be a little bit below that. When in doubt, zoom out. Gold has outperformed the S&P 500 since 2000. Gold has matched the performance of the S&P 500 since we left the gold standard in 1971. Am I cherry picking dates there? Of course. But if you're gonna say that gold is dead, you gotta say the same thing about the S&P 500, at least during specific long-term time horizons. So that's a small technical update. We're going to look at two updates on the fundamentals that are driving the price of gold. Number one, we're going to be looking at what the Federal Reserve is doing. The price of gold anticipates inflation. It moves with the anticipation of monetary policy. Unlike other commodities like copper, it's not going to move with inflation, participating in that price rise. It's going to move ahead of that because it's a monetary metal. That's why the price of gold skyrocketed after the decision made by the Federal Reserve to basically bail out the entire economy, because it knew all of that money printing, those trillions of dollars coming into existence, would eventually bid up prices. Did it bid up prices right away? No, but gold sniffed it out and ran it massively. It overshot into August and then had to correct, and it's been moving sideways since because it's been anticipating the taper. It's been moving sideways and downward since then in anticipation of the Federal Reserve tightening, tapering its balance sheet, or at least tapering its purchases, raising rates. And now, really since last August of 2021 until now, gold has been moving steadily, little by little, higher and higher, making higher lows in anticipation of the tightening failing, causing a crash, and the next round of easing to start, in which case we're going to see another giant move up in anticipation of the future inflation that money printing will cause. Now let's move over to inventories. If we take a look at COMEX inventories in the vault, we can see that registered gold remains at the lowest level since November 30th of 2020 here. That red line, we've just recently seen a drop in vaulted gold. It lost about 443,000 ounces. This is the biggest drawdown in inventory since October 20th of 2021. This big drop right here. These charts and updates are put together by Misc98 on Twitter. Go ahead and give him a follow if you are on Twitter. In summary, there's nothing going on with the price of gold that should be a surprise to any investors. It's moving along right as expected. Both the technicals and the fundamentals are extremely solid right now, meaning that anytime now investors who are patient should be handsomely rewarded. But don't take my word for it. I'm just some guy on the internet, and this shiny yellow rock could start raining from the sky and land in everybody's everybody's backyards, pushing the supply and demand equilibrium to render the price of gold at zero. Wouldn't that be something? As always, really appreciate you guys. Thanks so much for watching. Have a great day.